What's up guys, William Ryan here, back with another video, and in this video I'm going to be going over the advanced time and price um, concepts that I talked about in the last video. And so we're just going to be going over crude oil here on the 5-minute chart, and we're going to drop down into a 3-minute chart, looking at the buy side opportunity that we have here. So we're going to just map out the framework here as always. I'm just going to type it out for you guys so you guys can see. If you guys are new to the channel, welcome. Thank you for subscribing. Thank you for interacting. Thank you for asking questions. Thank you for all the support. I truly appreciate it. I've been getting a lot of good feedback, and when you guys give me feedback in the comments and through likes and subscriptions, it just really encourages me to pour back into you guys. So again, thank you for that. So time, we're going to be looking at the key numbers that we look for here at Optimal Advance. So 3, 6, 9, and 12. These are the numbers that we're going to want to be focusing on of time of day. They're very, very key, very, very important. And so we're going to look at price as well. So that 20 level, the 35 level, the 50 level, the 65 level, the 80 level, and the big figure level. And the last thing is the repeating fractal. Okay, and the market maker buy and sell model. Okay, we'll just add actually here for the people who are new. We used fair value gaps, balanced price ranges, okay, order blocks, and breakers. Okay, these are the only PD arrays we use here at Optimal Advance because we target internal range liquidity and internal range setups. Okay, anticipating a change in state of delivery within that premium or discount market. So today we're just going to look at the ranges very, very quick. This is going to be a shorter video. It's not going to be too long, less than 10 minutes, hopefully. And so we're just going to take a quick look at all the ranges here within this market maker model, both on the sell side setup that we have and the buy side setup that we have. All right, so we're just going to take a quick look here at all the price ranges. So from the range high to the range low, where this Optimal Advance setup happens, right? So we have high, low, price retracing back up into a premium, okay, trading into that fair value gap, the order block, William %R SMT, right? So whenever we have SMT on the William %R in the price chart, it indicates to us a change in state of delivery, right? So SMT as a smart money tool, as an ICT concept, we know that it indicates to us a change in state of delivery, right? And oftentimes in a price chart, let's say if you have oil and dollar, say if you're getting SMT within the correlated asset classes, it indicates to us a reversal, right? And that's one of the changes, or sorry, that's one of the price deliveries that we get, right? So consolidation, expansion, retracement, and reversal. Those are the 4 price deliveries that we get within the algorithm as a whole. And so at Optimal Advance, again, we target that internal range setup, and we use the William %R to confirm which PD arrays and which internal range setups are going to be the most fruitful. So moving right along, we're going to just look at all these ranges very, very quick. So here in this range, again, guys, it's not going to be perfect, okay, but we're looking for these ranges to unfold within the models that we seek. Okay, so whenever we have Optimal Advanced signatures, we want to start to look at the ranges as a whole, and we want to see the 20, 35, 50, 65, 80, and 100 point ranges unfold within our setup. So here from range high to range low, okay, this is the range that we're hunting, right? 65 points. All right, 65 points. Okay, moving right along into the retracement, into the premium, 50 points. Okay, you can see the number here, right? And that's another range that we expect price to create. Moving right along, from range high to range low, roughly, we have 80 points. Okay, we have 80 points. And so we have a range here of 65 points. Okay, from range high to range low, it's 65 points. We retrace into that fractal 50 points, and we get an expansion of 80 points. Right? These are all significant numbers. These are all numbers that we want to look for these ranges to unfold. Okay, and we see that these numbers are holding true even on a commodity such as crude oil. We're going to move right along into this buy setup, and we're going to drop down into a 3-minute chart. Okay, and you guys can clearly see the William %R characteristics. I'm going to map this out very, very quickly here. Okay, very, very beautiful setup here on the 3-minute chart. Very, very nice. So we're going to look at the ranges here. So from range low to range high, okay, with the bodies, again, it's not going to be perfect, roughly 50 points. Okay, roughly 50 points. That's one of the numbers that we look for here at Optimal Advance in terms of ranges. And so we can see the theory holding true here, right? The retracement back down into this fair value gap order block, right? Discount market with the William %R characteristics, 35 points. 35 points, right? And last but not least, we look at the expansion here. Roughly 65 points, guys. 65 points expansion, right? So we have a 50 pip range, 35 pip retracement, and a 65 pip expansion, right? And if you guys notice, there is a repeating theme in terms of the ranges that we anticipate to retrace and expand. So if we have here a high, a low, right, and this range is 65 points. For us to be in a trade, we want to see price at least retrace 35 points to 50 points. Okay, so that would mean that we are in a premium market, and we can look to capture highs and lows at those price points, 35 and 50, because this is a 65 point range. Looking at the buy side, just basing it off that framework, you have a 50 pip range. Okay, price must retrace 25 pips to be at equilibrium. So we anticipate that 35 pip retracement. That's really the only retracement that we want to see when we have a 50 pip range. Those are the best retracements that we want to look for, right? But we have a 50 pip range, a 35 pip retracement, and a 65 point expansion, right? So you can see here, if the range is 50 points, typically want to see 35 pip retracement and a 65 point expansion, right? Same thing on this side. We're going to go through it one more time. We have a 65 point range, okay, 50 point retracement, and an 80 point expansion. I don't know if you guys are picking up what I'm putting down, but I want you to go in and back test what I'm giving you. Okay, we're going to look at the price ranges, or sorry, not the price ranges, the vertical scale of price here, where these setups are forming, where the highs and lows are forming in this market maker model. And very, very quickly, we're going to go over them. So here, where is this high forming, guys? The consolidation high. It's roughly forming at 75.100. Okay, this high here is just shy of 74.500. Okay, the low down here forms at 73.800. The high here forms roughly 74,200. The low down here, 73,300. 500. The high up here, 74 800. Okay. The low, right, our optimal advanced setup here, 74 500. The low comes in at. And last but not least, price expands up, creates a high. Where does it create that high? 75 200. And so we can clearly see that these numbers are very, very significant when we're looking at price and price alone. So we're going to want to look for these numbers when ranges are forming. Okay, we want to see highs and lows and ranges form within these numbers in terms of ranges. And we also like to see these highs and lows forming at these prices. Okay, so when we look at price, these numbers, I want you guys to go back and study them. Very, very important. And in this example, just because I have to hop off here, I have to hop on a call. But so where does this high form? 3 o'clock. I know you guys can't see it because of my OBS settings. I got to change that. My apologies. But this high here, okay, if you guys go back and study this, this is crude oil, okay, capital.com on Tuesday, the 23rd of January, okay, on a 3 or 5 minute chart. This high here forms at 3 a.m. Okay, the low of this market maker model forms at exactly 9 a.m. The high here, guys, it's not perfect, okay, but it forms very, very close to that 12 o'clock hour. Okay, so with that being said, very, very quick video today. I wanted to squeeze out a video this morning because I don't have time to create one at all today. I am completely booked up. But so with that being said, guys, I hope this got you guys thinking, and I want you guys to go back test the price ranges and also the vertical scale in terms of price. So with that being said, guys, I thank you guys for listening. Again, I thank you guys for all the support that I've been having on this YouTube channel, all the comments, all the Instagram DMs. I really appreciate the support. And the more you guys interact with me and give me feedback, the more I'm going to pour into you guys. So with that being said, God bless you guys. I hope you guys have a blessed week and a blessed Monday. And until next time, good luck, good trading, and take care.